Shift our focus to the earnings corner. Well, Tata Steel has come out with its Q2 earnings numbers. It has beaten analyst estimates on all fronts despite reporting a dip in its top and bottom line. Revenue for the company has dipped over 1% and PAT was down 13% on a sequential basis. EBITDA also dipped to come in at 6,100 crore rupees while margins narrowed to 11.4% in quarter two. And joining us now to make sense of these numbers is Aditya Walekar, the Senior Research Analyst, Metals and Autos, Axis Securities, is helping us to understand Tata Steel's Q2 performance. Aditya, prima facie, the numbers look like they are above estimates. What is your overall take and first take on where the numbers really stand?
Yeah, the numbers are above our estimate and I think above the street estimates. But I think numbers are driven by better than expected EBITDA per ton at India. And as expected, European operations EBITDA per ton has, the losses have increased on a sequential basis. So not a major surprise there. But only thing we have to understand is there is an increase in EBITDA from other trade-related operations, which has somewhat inflated at this consolidated EBITDA for the company. So I think that is reflecting in lower other expenses in the consolidated income statement. So final details we have to understand from the management what is driving that lower other expenses in the income statement. Does it include any one-time gains? And is that the reason for the increase in the EBITDA?
Right. Absolutely, Aditya. We'll have to wait for management's commentary on, the growth trajectory further for the company and the outlook and vision. But let's talk about EBITDA per ton loss as well, which after narrowing for 3 quarters, it has expanded again to $72 per ton. What's your take on when the tide could finally turn for the company on that parameter?
Yes, as you said, the losses have expanded on a sequential basis. So I think first we need to get a split of these losses with respect to UK and Netherlands. What we expect is that the Netherlands operation should have done well and UK losses would have expanded, but we will have to wait until they release their presentation and we can see the split there. Going forward, the management commentary on UK, because that will be slightly critical and it is slightly difficult to project the EBITDA per ton trajectory over there because it will not be using going forward coking coal and as it will be operating on a trading basis. So as far as Europe is concerned, in future for Netherlands, we expect a slight improvement in EBITDA per ton as the lower coking coal prices will flow in there. But UK, as they close the heavy end assets, so how they will guide, that will be the key pointer to watch out. And that will decide the trajectory of the European EBITDA per ton in the upcoming quarters.
All right, so you're expecting, a betterment of EBITDA per ton going forward. On that note, Aditya, thank you very much for taking the time out and helping us decode Tata Steel's Q2 earnings numbers. Well, the numbers have beaten analyst estimates on all fronts despite reporting a dip in the company's top and bottom line. On that note,
if you like this video, then like, share and subscribe to ET Now.